Hey, Suffield, Connecticut homeowners. Are you curious about the future of the Suffield housing market? Are you wondering when mortgage rates will finally come down, if home prices will dip, or even if you'll be able to find a place to move next year? Well, you're not alone. Today, we're tackling the biggest questions about the current housing market. Let's break down the questions on everyone's mind and see how those answers might apply to our local area in this month's Suffield, Connecticut housing market update. I'm Stephanie Salerno, a local realtor in Suffield, Connecticut, licensed in Connecticut and Massachusetts, here to give you the latest scoop on the housing market. But first, let's take a look at what's been happening in Suffield. Now, for Suffield in October, 9 homes sold, and that's up 29% from October of 2023. 9 new listings came on the market, and that's actually down 25%. The sales price to list price ratio is 99.9%, and that's down 2%. And the average sale price per square foot is $218, and that's actually down 6%. Suffield's single-family home average sales price was $643,000 in October, and that's up 9% from 2023. And the average days on market was 41, and that's actually down 63% from 2023. And Suffield's month supply of inventory for October was 2.67 months, and that's actually down 51% from October of 2023 and up from 1.62 months in September of 2024. Now, how that works is 6 months is considered a balanced market. So anything more than 6 months is a buyer's market, and anything less than 6 months is a seller's market. So even though we've seen inventory tick up a bit in Suffield, we are still solidly in a seller's market. Now, before I go any further, if you find this information useful, hit that subscribe button below to receive future Suffield, Connecticut housing market updates. So in my day-to-day interactions, there seems to be a common thread with the questions that are on people's minds right now about the real estate market. So today, I'm going to address those top-of-mind questions that are out there for our buyers, sellers, and our investors. So first, when will mortgage rates come down? This is a big question right now. I've often said that if you try to forecast mortgage rates, you'll likely be wrong because there's so many factors contributing to rates. But what we can lean in on is what the experts are saying and see what they're predicting for next year. Next up, what will it take for home prices to come down? Many people are wondering if this market is sustainable, and that could lead to other questions that I'm going to answer here in a minute. Also, will I be able to find a home if I move? I know that's been a struggle for the last couple of years to even find your next home. Is the housing market going to pick up next year? What's going to happen in the real estate world? And lastly, is the market going to crash, which I know is a big question I hear out there. Okay, so let's jump in here with will mortgage rates come down? Let's start with a quote from Ralph McLaughlin, senior economist at Realtor.com, who says, "The trajectory of rates over the coming months will be largely dependent on 3 key factors. 1, the performance of the labor market. 2, the outcome of the presidential election. And 3, any possible reemergence of inflationary pressure." While volatility has been the theme of the mortgage rates over the past several months, we expect stability to reemerge toward the end of November and into early December. So we covered before, there's a lot of factors that affect the mortgage rate market, and where we sit here today, we are on the other side of the presidential election. And as more questions get answers, the hope is to continue to start to see some stability in the market. But what I can tell you is all forecasters that we followed here show going to the next year a better interest rate mortgage environment. That means it'll be cheaper to buy your home. Your buying power will be increased. I also believe that many people who have been on the sidelines and weren't making a move will be coming back into the market. I've shown in the past months a study that was done by Bright MLS that said over 70% of buyers in the last year abandoned their search because of prices. That's pretty impactful. Well, forecasters are coming to the next year. They predict rates to continue to come down, and that will be huge for buying power and what I believe will show great strength into the 2025 real estate market. Next up, what will it take for prices to come down? We've seen prices on the rise over the past several years, and many people are questioning if that's sustainable. Well, let me start with showing you a picture of just why prices have gone up the way they have, and then I'm also going to show you what the forecasts are for 2025. First, exactly why have prices gone up? Well, the simple fact is, if you look at this graphic, this is a look at the builds in this country going all the way back into the 70s, 80s, and early 90s. We built more homes in this country than we have in the last 15 years. The red bars there represent the last 15 years of builds of single-family housing units in this country. And builders aren't overbuilding right now. They're just trying to catch up from all the underbuilding years of the post-housing crisis. The green bars, there are 4 consecutive years of record-setting numbers of homes built in this country, and that has never happened before and hasn't happened since. So why have prices risen to the degree that they have? Well, there's several factors for that. For one, mortgage rates fell into 2020 and into 2021, and a lot of people came rushing into the market. And then combined with that, there weren't the number of homes on the market for the amount of people that were wanting to buy them, especially with the millennial age group, which is a huge population group, all reaching their peak buying age. And that certainly drove prices to rise the way they did. So it's not a situation in 2008 where demand was artificially inflated. Demand was real, but there weren't the number of homes to meet that demand. So if you think of simple supply and demand economics, there wasn't enough supply across the country to meet the buyer's demand. So what does that mean for next year? Does that mean prices that have gone up must come down? Well, these 10 forecasters you see right here, the lion's share, so somewhere between 3 and 4% appreciation in residential real estate. Next year, the average being 2.5%. You see it on the left side of the screen there, but a very, very healthy and very normal price appreciation is going to be happening in 2025. And that's a good thing for the real estate market. The rapid rate of appreciation we've seen in the past years does not make for an overall healthy market. So seeing appreciation normalize has been a move in a positive direction. So now on to the next question. If I decide I want to move or I'm looking to buy a home, will I be able to find a home? Well, the quick answer is more homes are going to be coming to the market. This is a look at new homes coming to the market from Realtor.com going all the way back to 2017. And if you think about this and look at 2017, 18, 19, and then good old 2020 comes along, we deplete the inventory in this country and it bottoms out somewhere the beginning of 2022. And then we've been in this sort of upward trajectory with inventory across the country over the last couple years. The majority is actually due to the rising mortgage rates, the lack of affordability, and people saying, we're going to kind of sidestep this market. And we've talked about in past market updates how the election impacts the market and people pause their search for a new home. For more information on that, check out our June Suffield housing market update. Redfin actually just did a study and 23% of first-time home buyers actually said they were going to put off their search until after the election. So there's this new inventory coming to the market, and inventory is starting to climb a little bit, slightly in Suffields. But what we really want to see is coming back to a more balanced market where buyers have actually something to choose from. But I guess the quick answer is yes, more homes are coming to the market. Back to Ralph McLaughlin from Realtor.com, who said, there were 29.2 more homes actively for sale on a typical day in October compared with the same time in 2023, making the 12th consecutive month of annual inventory growth and the highest count since December of 2019. And since real estate is a local market, October's inventory was actually a little bit lower than last year, but inventory has increased from last month. So the next question I'm going to cover is, will the housing market pick up next year, and what is next year going to look like? Well, I can tell you this, you should expect to see more homes. Matter of fact, the projections for 2025 that we would sell about 5.2 million homes. This is total home sales in the country next year. And you see this going all the way back to 2019 and seeing the market peaked in 2021 with 6.9 million total homes sold. But experts are predicting that we will see 2024 as the bottom of the market from a transaction standpoint. They're predicting that we'll see more homes sold next year and that even the years following, we'll see incremental growth in home sales as we sort of come through this turn in the market. So we're seeing here forecasters are predicting mortgage rates to come down, more homes to be coming to the market, and homes to appreciate at a much more normal, sustainable pace. Those are really, really good things, which leads me to the last question. Is the market going to crash? I feel like that's actually one of the biggest questions on people's minds right now. It comes up quite often. I think there's a couple things we need to understand about this question, and I'm going to break it down for you right now. First, I think this question is really rooted in the premise of people remembering 2008. And there's a lot of talk right now about the recession and the economy and what's going to happen. So it brings back that uncertainty and those fears and the question of what's going to happen in this market. And secondly, we've seen home prices raise at this really rapid rate, and it feels a lot like back then, and we all remember what happened then. But it's important to know we're in a very different market right now, and I'm going to explain this. So to give you the first piece of where I'm sure this concern comes in is that consumer homeowner debt in this country is at a record level. So to break this down, the orange portion of this is mortgage debt in the country, and it's certainly grown. This is going all the way back to 2001. So we know that mortgage debt has grown. Then HELOC debt kind of remained the same. It's that blue bar right above the orange bar. And then you see auto loan debt is growing, and we know that student loan debt is also growing. Then you have the balance of other miscellaneous debt in this country. But there's an article that came out a couple years ago, and it said something to the tune of mortgage debt in this country surpassed $10 trillion. And everyone was like, well, this sounds terrible. $10 trillion is a lot of money. Well, I'll tell you this number right here in the orange on the mortgage debt represents 13 trillion. And I would remember that 13 trillion is the amount of debt in this country on residential mortgages that are outstanding. I mean, that's a lot of money, but here's what the headlines are failing to mention. Here's where they're sort of failing to give the perspective on that while there's 13 trillion, you see it there in this orange bar, there's 35 trillion in equity and the total value of real estate, 48 trillion in this country. So 48, 35, and 13. So looking back at 2008, when there was more mortgage debt than equity in this country, that is where the term strategic default came into play. And that happened in 2008. Strategic default, meaning we owe more on the home than it's worth. So we're just going to walk. Now you can see that we're nowhere near that today. 13 trillion in debt, 35 trillion in equity, and 48 trillion in value. That's actually an extremely low amount of debt on homes in this country. There is an enormous amount of equity, and homeowners are in a very, very solid, strong position. The one thing that came out of those unicorn years was that people were going to do things differently. And here's a look of where I just want to sort of crystallize that point for you. The graphic on the left shows the housing crisis and the debt in orange there, the equity in green. Remember I said there's more debt than there was equity? And where we stand today on the right, 13 trillion in debt, 35 trillion in equity. So a very, very, very strong market. So what's the bottom line? All these questions lead to what you should expect from the real estate market next year. So based upon what experts are saying, you should expect the total home sales in this country to rise. You should expect that we look at the transactions this year being the low point in the market transaction-wise. You should expect mortgage rates to come down based upon what forecasters are saying about 2025. And you should expect prices to still rise, but at a much more normal, reasonable rate of appreciation. If you want to talk more about any of these questions or need more information, let's connect. And if you're worried about how to buy and sell at the same time, it can be done. We work with many home sellers just like you to help them make a seamless transition. So whether you're looking to sell or just might want to discuss what options exist for you, please reach out as I'm here to help you achieve all of your real estate goals. And if you want to quickly see what your home is worth, click that link below for an instant home value opinion. As a local realtor in Suffield, Connecticut, I strive to provide you with the insights and knowledge to navigate this market with confidence. If you found this information useful, please give us a like or subscribe or share this information with a friend. This is your November Suffield, Connecticut housing market. Have a fantastic Thanksgiving with your loved ones. Enjoy that time together. We all have so much to be grateful for. See you next month.